With only 3 months left in the year, it's time to work on your end-of-year to-dos. One priority is to satisfy your required minimum distributions, or RMDs, before December 31st.
If you're a client, we've probably discussed your RMDs and may have helped you fulfill them already. If you're not a client or you're unsure whether you need to take an RMD, we can help. But first, what is an RMD?
RMDs, or required minimum distributions, come from an IRS mandate that says those turning 73 years old or older this year are required to distribute or take out a minimum amount from certain tax-deferred retirement accounts, such as 401ks and traditional IRAs.
If you've started taking RMDs in prior years, you will keep taking them. If you have only Roth-based retirement accounts, you don't need to worry about taking an RMD.
If you haven't satisfied your RMD yet, you still have time. The final deadline for most people is December 31st. If this is your first year taking a required minimum distribution, however, the IRS grants an extension. Still, it's important to talk to your advisor to understand the tax implications of waiting.
While you still have plenty of time to take care of your RMDs, if you miss the deadline, you can incur a 25% penalty on the amount that you were required to withdraw. Reach out to your advisor soon if you have any questions or want to check this item off your to-do list.
When you take your required minimum distribution, you have a few options of what you can do with that withdrawal. The first option is to move the funds from your retirement investment account to a non-retirement investment account. This is the best choice if you don't need the funds or you do not have a desire to give the money to a non-for-profit, as this approach keeps the money from leaving the market. You will have to pay taxes. However, we can withhold the taxes for you when executing this transition between accounts.
A second option is to send the money you withdraw to your bank account. Again, we withhold taxes, but the money becomes available to use as you see fit. Finally, if you'd like a more tax-advantaged strategy, you can give the money you are required to withdraw directly to a 501c3 charity and avoid paying taxes on it.
You can also utilize a combination of these strategies. For example, say your RMD amount is $6,500. You could send $1,000 directly to a charity, $500 to your bank account, and the remaining $5,000 to a non-retirement investment account. No matter your situation, we can assess the best distribution strategy for you.
Your advisory team can help you fulfill your RMDs and navigate special circumstances. For example, if you have inherited a retirement account, talk to your advisor about distribution requirements and how to potentially minimize taxes. Finally, if you've satisfied your RMDs from investments not held with Credent, be sure to let your advisor know, as excess withdrawals from outside accounts could potentially offset the amount that you need to take from investments held with Credent.
If you have not satisfied your required minimum distributions yet, call your advisor soon.
If you don't have an advisor and need help meeting this deadline, reach out to our team at contactus@credentwealth.com.